Hey, Bruce here with California Gold Connection. It's been a long time since I've done a video. Things just been crazy. Fundamentals. Normally, I've told you guys that when it comes to gold and silver, things move so slow. Technical analysis kind of rules the day. Yeah, you'll have some fundamentals, some happenings around the world that'll make a little market blip or a fluctuation, a pretty dramatic fluctuation here or there on occasion, but not very often. Well, we are flipping that on its head. We've got all the unrest in the Middle East that has absolutely made the markets go crazy. So fundamentals are winning the day. Technical analysis seems to be holding on for dear life. Yeah, what day by day, it's been pretty crazy. Things are starting to settle out. We've signed a deal with Iran that will probably never hold for real, but they're going to pretend like it will probably and muddle through at least past the elections, and then all bets are off if I had to guess. But anyway, we'll review these markets, see what they're doing currently and what to expect. Remember, this isn't financial advice. This is just speculation. One big thing we're going to talk about today is silver, and July 15th or 13th is a culmination of multiple reporting and market moves that's going to kind of dictate the direction silver is going to go. And I tell you what, silver could have a massive move coming up here. But we'll just have to see. I'll give you a couple little indicators. We're not going to get too far in the weeds, but we're just going to touch on it. So let's look at the gold to start with. As you can see right here, you guys know that I've got these yellow lines of support and resistance I put in here. This blue line, this horizontal line, and the vertical line is where the Iran war started. And I delineated that so it's pretty obvious of the direction. You can see right here. Actually, I can't get it to go to this day, but right here is where we started the Iran war. And the next day you can see what happened, and we've just plummeted. And this is gold. And now gold has always, in a major global conflicts, gold always goes down normally. And then after the conflict resolves and things start settling out, gold doesn't just make a minor move up. Normally it's a skyrocket move up. That's just history. Whether we're going to do that this time or not, your guess is as good as mine. But if you look at this situation here, it's kind of like a perfect storm for gold to go down. Why is that? Well, in any conflict, they start selling gold to support their war efforts, right? Well, you have all those countries surrounding Iran that share the Hormuz Strait that are large oil producers and sell oil to generate revenue for their countries. Their revenue stream dried up in that regard. All their ships have been locked up in the Strait of Hormuz and they can't move their oil. So what do they have to do to keep their countries functioning? They start selling off their gold reserves, right? They can't just let their country flop and flounder. They got to keep things moving, so they start selling their gold. Well, anytime you dump a commodity on the market, you drive prices down, right? So, this pretty much stands to reason. This is following historical trends right now. And here we are. So you can see we dropped down and we've been bouncing around, and we started to consolidate and starting to find a level of equilibrium here, hopefully. And you can see this pennant flag, or this channel, or basically this pennant flag we've been in. We broke down out of that. And the concern I have is the measured move out of there will be the bottom of this bar, and that brings us all the way down to 37.78. Okay. Now we do have this yellow line I've got drawn in here. If you look historically past, that's probably a very solid level of support and resistance. Well, not a lot, but right here we got some good support and resistance right there as we're working our way up. So that's a level that if we broke down, I would like to see that hold. What I would really like to see happen is we W out here. And I would like not to see this W drop below this leg. I would like to see us create a lower low. I could still see this coming down some more. And I'd like to see it holding here somewhere and then turn back up. And then right about here at the neckline, then we'd have a measured move out of there about up to, I don't know, if I had to guess, somewhere in there, that $4,500 and just $4,600 range. That would be a nice move up, and then you can see that pretty much is in confluence with this downward trend, that resistance level. So we'd have another level of resistance right about here in this area, and if we could break through that, then we'd be off to the races again. But that's a little ways out, man. We got to wait for that one. But if we drop down below here, I'm pretty confident we'll end up testing this 39.50 level ish. I don't want to see us go down that far for sure, but here we are. And the more things, if things stabilize and ships continue to move through the Strait of Hormuz, and all the powers to be keep everything copacetic, I think we'll start seeing gold prices reverse. But we'll just have to see. It changes day to day, and that's what's so tough about this market, and especially being a gold dealer, trying to navigate all this and make sure I can stay in business. You got to be very careful about how you're buying. So for those of you guys watching this that are buyers, you hear a lot of buyers out there saying, "Oh well, I'm not going to pay less because I'm trying to treat my clients and customers fairly." And it's like we all want to do that. But if you put yourself out of business because you were trying to be altruistic, that's not going to help your customers tomorrow, right? So anyway, we got to manage our businesses properly so we stay in business and maintain a profit margin and don't let these big giant moves. These are daily candle. Look at this move from here to there. Let's just measure that move. This was when the war started and we dropped down to there. That is where are we at here? Oh, I'm sorry. That's not what we want. Here we go. Let's try this. So that intraday we dropped down 23% all the way down there, okay, off this market on the gold. Silver was 34 or 35 to 30 40 35 to 40% closer there. I think more like 35, 37%. We had to took a hit in silver. So yeah, it's a massive move. And so if you think about $100,000, if we're as buyers, if I'm buying 100 grand worth of metals of any sort today, and I take a 25 to 40% hit in a few days time, within silver, it was a 2 day time. A 40%, that's a $40,000 hit on every $100,000 I'm putting out there. I'm not going to put myself in that position. So anyway, managing around this, and as you guys are watching this that are actually selling stuff to me, I have a lot of dental clients that sell to me. These are the things you got to understand. It gets a little esoteric and in the weeds, but this is why your payouts may fluctuate. And then I like to share, I have a lot of buyers out there that sell to me, and I like to give them a heads up on these moves like this so they're adjusting their payouts accordingly. What does that mean to you, the seller? Yeah, less payout, but it all trickles down, right? If I'm getting paid less because of the markets, that trickles down to you, and just that's how it goes. But that's the market, man. Especially my dental clients. You're kind of dollar cost averaging out every 6 months to a year. You guys sell, so you get to take advantage of these highs and highs and highs, and then you get some lows and lows and mids and mids and lows, and you just let it ride. And if you try to time it, none of you guys are paying attention to the market that close to time this stuff, and I can't even time it. And as a business, I just can't hold forever. I got to sell and roll my capital, right? So I'm in the same boat you are, just in a different vein and with a lot more volume. So anyway, that's the gold market. What I'm watching right now is I'm really hoping we don't break down and then test this level, and I would like to see that be a level support. There's not a whole lot there. Let's see, what do we got back here? It's low, but anyway, we're going to be hoping that level of support holds if we break down there. I don't want to see us all the way go down to the measured move. If we do, then you can see we have nothing holding us up, and we're going to be falling all the way down to this level here, which was a very good level of resistance, which will hopefully come support. So I would like to see our worst case scenario at that $3,450 level, which is this level here. What is this exactly? Basically, that is 34.45 level. So basically 34.50. I would like that to be the worst case scenario. I don't want to see us get anywhere near there. I'm hoping now with things resolved in the Middle East, gold will start turning around. We'll start moving back up. But we'll just have to see how it plays out. Let's look at silver. Silver's the big play, man. If you guys are stacking silver, I am not selling. That doesn't mean you need to do what I'm doing. I'm just holding on for dear life, and I'm buying more like crazy, as much as I can get a hold of right now, because all the fundamentals haven't changed. And what you want to look at on this June 13th date, when all the economic reporting comes out, there's a couple things we can look at, and that's the COMEX silver inventory. Registered silver is 86 million ounces. Eligible silver is 235.7 million ounces. If you see these numbers drop below 200 and this start going down, that is bullish for silver. Okay, if these numbers are going up, that's telling you we got a bear trend coming potentially. That's one indicator. If you want to look at the China, here's a very good index to look at. This is the China Manufacturing Purchasing Managers Index, the PMI. Um, 50 is neutral, if you want to look at it that way, and anything above 50 is a bullish for silver. Anything below 50 is bearish for silver. And what does this mean? These are all the contracts China's getting for manufacturing, and they are 70% of the world's electronic market. So this, and all those electronics use silver, solar, electric vehicles. They do massive manufacturing that requires silver. So if you see this index going up, that means they're getting more orders and they're going to be using more silver, and they're already have a supply deficit in China, and they're stacking and put limits on exporting silver, and they're stacking silver. So if they're needing more silver because their orders are going up, that's going to mean bullish prices for silver, right? If the market's slowing down and things are waning and they're not getting the orders, and we're having jets cooled worldwide with all these type of electronics, the solar industry slows down and the electric vehicle industry slows down. If all these markets slow down and the orders drastically reduce, and you see this number dropping below 50, well, now that's a bearish sign for silver, right? So these are two quick indexes you can watch to kind of get a feel. There's others out there and other things you can be paying attention to, but these are kind of some pretty obvious numbers that might give you a feel for what the direction silver might be looking at, okay? And what does that mean? If you're watching, if it's a bearish or bullish sign, well, if you're stacking a whole bunch of silver and you're not in it for the long haul, you may want to sell some of your position so you protect your downside if you're a shorter term player. If you're a long term holder, well, we ride these things in and out. Sometimes it takes some white knuckles, man, because these drops. Look at this thing right here. This is the drop in silver. Let's measure that while we're here. This was ugly, man. This was ugly. You saw this in one of my last videos I did, probably. That's 47% drop in 2 days, 3 days. And you can see, well, I got the Iran, is that right? Let's see here. Oh, yes. So that's where the Iran war started, but let's get rid of this. But this was the massive parabolic run we had coming into the beginning of the year in January. This was just a crazy run. I knew this was going to dump. Everybody did that, pays attention and knows what they're doing. Knew this was going to dump. I was expecting at least a 30 to 40% drop, and we got that. So I stopped buying silver. As it was going up, I started paying less for bullion. I had to do it because I couldn't move it as fast. They started restricting. The refiners were starting to limit what they would take. They shut down altogether scrap and 90% silver coin buying altogether. And as it went up here, I don't know what, 80-ish. I think I stopped just buying at 80% because I didn't want to tell people I was going to pay so far back a spot, even though the refiners were wanting me to pay way back a spot. I just didn't want to have that conversation and have my customers thinking I'm ripping them off. If they absolutely had to have cash, that was one thing, but that was down in this range. I just stopped buying, and I would watch his YouTube videos of these guys with coin shops and whatnot. Oh, I'm still buying, we're buying, and I'm not going to pay. My refiners want to pay me $15 back a spot, but I'm going to keep it at 10 or whatever. That's all great. That's all altruistic. But these guys that are doing that, buying hundreds of thousands of dollars a week or every couple weeks or whatever their volume is, they went upside down by 40% right here, and then you can see it only recovered a little bit. Let's look at that recovery. If you bought a bunch of silver up here back, so you bought it here, and now it's only here, you're taking a 30% hit. You're wiping out. Now, can you absorb that as a major player? Maybe you can absorb it and you can move some, but you may have wiped out your profit margin for 6 months of your business or even a year, just because you can hold on and survive because you got enough money in the bank doesn't mean you didn't wipe out your profit margin, right? So those are the type of things that I was watching guys on videos. I'm going, man, guys, that's just not a way to run a business. And I understand wanting to take care of your customers. I totally get it. But if you're going to run a business successfully and be there tomorrow for your customers, you got to do today what makes sense business-wise and keep emotions out of it and explain to your customers, hey guys, this is where we're at. This is what I'm having to do. And I'll tell you, I watched a lot of people get hurt. I've watched businesses go under. It's rough. It was rough, man. But anyway, back to the silver market. You can see since the war, This was a necessary drop, and then we started bouncing and going up, and we were working our way back up. And I was wanting to see us trade sideways and consolidate to cool the jets. The market in the U.S. we had a glut of silver. I want to see that silver process bought up and things kind of stabilized. And you can see we had a kind of a nice equilibrium here since the Iran war started. Well, now we've just dropped down. We've taken a hit, but you can see this level has become a real nice level of support. Now, what I didn't want to see is, oh no, that's palladium. Let's go back to here. We'll look at that in a minute. But anyway, you can see this level. What is this right here? We're at $60. You can see $60 is holding. All right, and you see we have these wicks. These are shorts. These are wicks that are taking out all the shorts, shaking out the weak hands. People are bailing out of the market. And I'm telling you, if you're going to be holding a lot of silver, you got to have some diamond hands, because man, these moves can make you. I mean, look at this massive, but look at this one. I mean, just this from here in a week or week and a half or whatever it was, that's another 26% drop right there from that level. That's a lot to stomach, man. And you know, people panic. And I'm telling you, if you look at precious metals over time, if you hold long enough, you will always win. So precious metals are normally a very long-term play. If you're trying to flip this stuff, if you really don't know what you're doing and you don't know how to chart and you don't know fundamentals, you have no business doing that. You're just going to hurt yourself, okay? Dollar cost averaging in and holding over the long term is your best play, and you will always win. And you'll generally always outperform the market that way. All right, let's get rid of that. So anyway, that's the silver market. We're trying to hold this 60 level. Looks like we're going to test it here again. I would love to see us hold this and then work our way up. We're just going to have to see what we do. I'm buying. Anywhere down this level, I'm buying. I'm happy to buy. If we break down to 45, back down to here or something, so be it. It's still cheap, in my opinion, and I'm buying at these levels, okay? Let's go to palladium. For those of you primarily in my dental industry, is the only place this really matters. Nobody else cares about palladium, but as I've told you, palladium is a huge driver in your payouts when it comes to your dental scrap, okay? Because you have a huge chunk of your scrap is palladium. It's gold and palladium bearing or largely just palladium bearing when you have you down in your noble metals instead of your high noble, okay? You get a lot of palladium. So palladium's a big player. So it can drive your price, your payouts drastically. Let's just do the measurement while we're here and looking at it together. Now these are intraday spikes. Let's discount those, okay? Let's go to the closes right here. Just from there to now, we are basically down 40% from where we were. Let's get out of this. 40% from, what is this? This is Tuesday. This is January 26th. We're 5 months later or 6 months later, wherever we're at. We're at June 22nd right now. And we're down 40% from where we were months ago. All right. So that's why your payout drastically differs in dental scrap, because the palladium takes a big hit when this happens. And I'm looking, now here's what I wanted to show you guys. If you go back to my way back videos, we had these 3 years where we're bouncing up against this $1,200 level, and we just could not break through. And we finally broke through. Well, look where we're at. That's that yellow line right there. Again, my levels of support and resistance I'm watching. Why do these yellow lines matter so much? Well, we fought this line for 3 years, and now look where we're at. We dip below it. I mean, oops, we dip below that. That's not, I don't want to see that, right? Because if we go below that and lose that level, then we can be going all the way back down here to 860. I don't want to see that, but fortunately we reversed and turned around. Now, Russia, as I've explained to you guys in the past, has about, I think they do, I'm losing my numbers, like 60% of the world's palladium supply. So what's happening in Russia can dictate heavily on what's going on in palladium, okay? So while the Iran war is affecting gold a lot, palladium's largely a Russia play. They're still battling with Ukraine, and it's kind of status quo. But with everything else happening globally, it's caused a downturn in palladium. So I'm hoping to watch this. You see this W right here? If we can W out, and this thing starts moving back up and we come up to here, that's going to be the neckline for that W pattern. And then I will be doing a video looking for, whoops, let me get this. Let me go back here and do that again. We will be looking for, and this is how I do these levels. Now I'm getting a little ahead of myself on this one because we're not getting a W out yet. But if you take this line and you measure this from the neckline, we call this. So you see the W starting here, and hopefully we see a W, the double bottom here, and you can see this is your neckline from here to here to here. That's your neckline. So we measure down and we measure down to here, and you take your bar and then you put it up to what would be the neckline there, which that yellow line's at. If that yellow line wasn't there, I would draw a white line like this. See here? Here's one I was looking at. This is a perfect example above here. See how we were creating this W and we started going up? I was going, all right, let's W out and hit here. And I just left this here. If we would have hit there, that would have been a measure move out of it. Well, we failed and we broke down. All right. So I left that up there. That's great. That's a perfect example of what I'm anticipating and hoping to see. And if I see this start crawling up and bouncing off there, I'm watching it to see if we break that level. If we break through and then we get a close, say I get a close here, and then we come back down and retest this and we get another close above that previous close, we're off to the races, and I'm expecting an upward move up into that range. All right. We're getting a little bit of weeds and technical analysis, but these are kind of the anticipatorial things I'm doing, because everybody doing technical analysis sees these moves. And when they see these moves, they can become a self-fulfilling prophecy, right? But if they were perfect, everybody would be a zillionaire. This wasn't perfect, right? I'm anticipating and seeing if we're going to hit here. It didn't happen. I've just left this here so you guys can now get to see this. Actually, we'll just leave this here and we'll just shorten this up a bit and put this over here. And that's a good thing for me. I like to leave these things here because when they don't happen, it's good for me to see that too. I just like to see it because, I don't know, I'm just a technical geek when it comes to this. But anyway, here we are again. I'm waiting for this W out. We're holding here. I'd like to see us turn around, start moving up, retest this, and if we could break through there, then I'm going to be looking for a measure move up there. I will try to do some more updated videos when these things start playing out. It's just with the fundamentals lately, and one day we're signing a deal in Iran, the next day we're not, and the next day kumbaya, the next day I'm going to bomb them again. The market doesn't know what to do to react to that, so we're just kind of in no man's land here. And everybody in the world stage is doing the same thing. They're going, what's going to happen? What are we going to have? We're going to stabilize. We're going to open the strait. We're going to open the strait as Iran can comply with the deal. They're not going to apply, blah, 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 blah. It's very, very tough right now. But it's been so long, I just had to jump on here and do this for you. Last thing we'll look at, let's look at the oil market. The oil market, because everything's derived out of oil in the Hormuz Strait right now, this is kind of a good indicator to tell you where we are globally. Is you can see where the Iran war started. Here we are flatlining. We were doing great. We're sitting here at $66 a barrel, right? And then when the war starts, and all of a sudden we explode and we go up, and now we're back in the Obama and Biden era. This is where oil was at all the time back in that era. But now you can see what's happened. You can just see this thing playing out. Oh, things are going to get better. Oh, no, they're not. Oh, things are going to get better. Oh, they're going to sign a deal. Oh, they're not. And we just keep doing this. Actually, sign a deal, but they're not, and prices go back up. And so we keep doing this. We're just paying this emotional roller coaster. But we've signed a deal, and hopefully it holds. Well, you can see this is where oil was right there at the start of this war. We are approaching the pre-war levels of oil again, which is at $67, $70 range. Okay, so I like to watch this. It kind of gives me sentiment around the world of what's going on with oil, because oil drives the entire world. Everything is driven off of oil. Everything is transported with it. Trucks, ships, economies. Everything is oil dependent, all right? I don't care how much you want to believe in solar and all the other windmills and all that stuff. Those are a microcosm of the market. Oil is the driver worldwide, and what it's doing, it gives you a good indicator of the world sentiment. Different countries may be having difficulties or having successes, but this is a good worldwide indicator, because gold and silver are a worldwide commodity, right? So just because we may be doing good in the United States right now doesn't mean the other countries are, and so it's putting pressure on the metals Just like I was telling you, during conflicts, they start selling gold off to support their countries. Well, we're seeing that. It doesn't matter how good we're doing. That's what's happening overseas. And so they're driving our gold prices down here. So worldwide, right? So anyway, I hope this video helped you. It's been a while. Sorry it's been so long. I've been busy, and it's just been like, with the market going up and down, no matter what I say, it's just crazy. But we've been going long enough. We got some things to look at. July 13th is a date to mark on your calendars and watch silver prices. You don't want to watch it starting then. Like I was telling you, if you want to look at a couple of these pages, go over here and watch these numbers and see what they're doing. If these numbers are dropping, that's a bullish for silver. If China's getting orders and this number is rising above 50, bullish for silver. Because they're getting more orders, they're going to have more silver supply. So these are just a couple of things you can just watch to kind of get a sentiment of what's happening globally. All right? You guys have a blessed day. Thank you so much for visiting the channel, and we'll see you on the next one. Bye-bye.